Friends, I hope you are doing well and must be studying very hard to achieve the goal of your life to become a chartered accountant as soon as possible. तो आज का थोड़ा सेटअप डिफरेंट है बिकॉज आई एम समवेयर एल्स सो यू माइट बी फीलिंग दैट सम डार्क एक्चुअली लाइट इज नॉट वेल ओवर हियर एंड आज हमारे पास ग्रीन बैकग्राउंड भी नहीं है तो मे बी हाथ ऐसे या कुछ भी ऐसे गायब हो जाएगा बट जस्ट टेक इट बिकॉज वी आर हियर टू अंडरस्टैंड द प्रोविजन. So today is the revisionary class of PGBP, one of the most important topic and chapter of our taxation module. And as I believe you all know that the first question, which is compulsory, is generally based on, the major part is based on the PGBP provisions. As I requested you all in the last classes also, I believe you must have revised the provision of PGBP, so you will be able to understand the concept more easily. And I have uploaded the notes and the solution of all previous lectures, so you can download it from the portal. So let's begin our topic, PGBP. But before going through the practical portion of the PGBP chapter, first of all, there is a very important thing to understand under this chapter, that what kind of question can be framed. So in case of PGBP, there could be a question in which you are going to asked to calculate the net profit as per Income Tax Act. So either it would be based on an information of P&L, trading and P&L account may be given in the question, or there is a possibility that receipt and payment account has been given in the question. So generally, if it is on cash-based system, so receipt and payment would be there. And in case of accrual system, profit and loss account must be there in the question. What do we need to do? How to solve a question in these two different kind of scenario? And because you have already gone through the normal lectures of PGBP, so I believe you must have know how to solve these kind of question. So if it is a profit and loss account, then what and how we generally solve the question? We take the net profit, which is given in the question, because this is a net profit as per accounting provision. And we have to convert this net profit, which is as per accounting provision, into the net profit as per income tax provision. So if there is any expenses which has been allowed while calculating this net profit as per accounting provision, and if that expense is disallowed under Income Tax Act, then what do we need to do? We need to rectify the effect of that expenditure while calculating profit as per income tax provision. How can we do that? We are going to disallow that specific expenditure under income tax provision. For example, if the question says that rupees 20,000 salary paid to an employee in cash, so as per accounting provision, there is nothing wrong. That 20,000 salary can be claimed as an expenditure, and with the effect of that expenditure, my profit must have been reduced by 20,000, because that 20,000 salary must have been debited to the profit and loss account. And after that 20,000 of salary reduction, my net profit must have been calculated. But in Income Tax Act, if any cash payment on a single day to a single person exceeding 10,000, that is going to be disallowed. So that salary is not going to be the part of expenditure under income tax. So to remove the effect of that expenditure, what do we need to do? I have to add back that salary. So technically what we are doing, the net profit as per accounting provision, we are just going to add back the expenditure which is disallowed as per income tax provision. And the same way, we need to disallow certain income which has been included in this profit. So the effect of those income which has been credited in the profit and loss account as per accounting provision, which should not be the part of my business income, I have to remove the effect of those income also. So need to reduce it from the given profit. Like suppose if in this profit, for the calculation of this profit, dividend income, interest income, rental income, profit on sale of asset has been credited in the profit and loss account as per accounting provision, then I have to nullify the effect of those incomes. So what do I need to do? I need to disallow or reduce those income from the profit given. after giving effect of disallowed expenditure, disallowed income, I will get my net profit, which would be as per Income Tax Act. If practically I will ask you, what exactly include in this net profit? So I can say the profit is having the effect of all allowed expenses and all allowed incomes as per Income Tax Act under PGBPL. So this profit shows, this profit explain, this profit is the actual effect of all the expenses which is allowed under Income Tax Act for calculation of business income, and all the allowed income which should be form part of my business income. So the consolidated effect of all these allowed income, allowed expenditure as per income tax is my net profit. So what exactly this net profit is? The effect of all allowed income and expenses as per income tax for a business would be the answer over here. Now, in case of receipt and payment, the procedure to solve this question would change. In case of P&L, we take the net profit and we add back or reduce disallowed expenditure or disallowed income as the case may be. But in case of receipt and payment, the concept will change. How? In this case, we have to prepare a new income and expenditure account. And for preparing this income and expenditure account, we need to only include, listen very carefully, we need to only include, we do not need to do this plus minus allowed disallowed scenario. We have to follow a specific procedure. We have to find out only those income, those are allowed as per income tax. So include only those income, those are allowed as per income tax provision, and only reduce those expenses, allowed expenses as per income tax. So whatever answer we have as a surplus. Now, can you tell me this surplus is actually the result of what? Allowed income as per income tax and allowed expenditure as per income tax. So if you will see closely, the answer logically are same between both the method, but the procedure is different. In case of P&L, we remove disallowed expenditure and the effect of disallowed income. So what will remain? The allowable expenditure and allowable incomes. In the same way, in case of receipt and payment, we only take those allowed income and allowed expenditure. So automatically the surplus will have the effect of all the allowed expenditure and incomes under Income Tax Act under the head business. So you understand the concept and the result of both the cases would be the same. Understood? Chalo. Now we will solve questions one by one. Let's start our MCQ or MTP question first. The question says, Mr. Amit, having business of manufacturing of furnitures, gives the following trading and profit and loss account. So you can see, because trading and profit and loss account has been given, so we will follow the first part. We will take the net profit as per accounting provision and will allowed and disallowed the expenditure respectively. First of all, the most important thing before solving a question, what I have told you, which is the most important thing to solve a question, students. Before starting a question, what should we always check before solving a question? Who will tell me? Gaurav Singh is saying 115 BAC. Absolutely correct. First of all, we have to see whether do I need to solve this question under default tax regime or under optional tax regime. So again, before solving this question, let's see what is the requirement of question. The requirement of question is compute the total income and tax liability of Mr. Amit for assessment year 26-27 in a most beneficial manner. When it is most beneficial manner, that means you have to solve this question via both methods, under optional tax regime as well as under default tax regime. So we will calculate our TGBP under both the regime, default tax regime as well as under optional tax regime one by one. And let me tell you, this is a very, very interesting question. Very important. So we will take, first of all, the default tax regime to solve this question. For that, we need the net profit. The net profit has been given as per accounting is 50,85,000. So first of all, we will take that 50,85,000. And then one by one, we will read the information given. So always start your question from credit side because it has lesser effect. 2 or 3 provisions are there. So you will be able to solve this credit side accurately and very easily. Sale would be the part of business. Stock is also part of business. Gross profit, of course, nothing to do. Now, income tax refund. This is not part of business income. So I do need to remove the effect of it. So what do I need to do? I need to reduce this amount. This 30,000 is going to be reduced from my net profit because this would be the part of other source income. And let me tell you, not the full value. The interest portion under this income tax would be the part under the head income from other sources. Clear? Somebody saying something. Yes, ma'am, correct. What the question asks, we have to find it out. Gaurav Singla, if it has interest, it's come under income from other source. Very good, Gaurav. Garg, sorry. Okay, now the credit side you can see has been done, but you can see there is a special 22,50,000 rupees income has been given, and the name is warehousing charges. Can you remember something special regarding this warehousing charges? Any specific treatment of warehouse charges? Can you tell me? What is the relevance of this warehousing charges? Do we have any special provision for these warehouse charges or not? Who will tell me? Anyone? Abhimanyu Kumar is saying exactly 3580. Warehouses, cold chain facilities, etc. could be the part of a specified business. Absolutely correct. And if any specified business information has been given, like hospital, hotel, pipeline activities, etc. So if those specified business has been given in the question, so that means for those questions, for those activities, separate profit and loss account need to be maintained. But section 35 AD specified business, or you can say section 35 AD does not have any fact under default tax regime. So under default tax regime, this warehousing charges would be normal income part. So we are not going to do anything with it, but we will do under optional tax regime. Now let's move on to the debit side. Opening stock is correct. Purchase, part of expense, paid, gross profit, bonus to staff, rent of premises, advertisement, bad debts, interest on loan, depreciation. So this depreciation must be as per the accounting provision. And we have to find out the depreciation as per income tax provision. So we will add back this accounting depreciation. Goods and service tax demand paid of rupees 1,62,525. So can you tell me the treatment of this? Anyone? Do we need to do anything with this goods and service tax demand paid? Or we do need to ignore it because it is a part of business expenditure as well under TGBP Act. Do we need to add back or nothing? Garv is saying normal expenses, no treatment required. Well done, Garv. Very good. So in this case, this is an allowed expenditure. We do not need to do anything with it. Again, salary is also allowed, miscellaneous expenses also allowed. Maybe there would be some additional information regarding these expenditure, but we will solve those information later when we will go through with the additional information part. Till now, it is clear. Chalo. Now we will see the further information which has been given to us. Following are the further information relating to financial year so and so. Income tax refund includes amount of rupees 4570 of interest allowed thereon. So do we have anything to do with this interest amount under our PGBP head? We have already reduced full value of refund, including this 4570, but this is going to be the part of income from other source, does not have any fact in PGBP. Salary includes rupees 30,000 paid to his brother, which is unreasonable to the extent of 5,000 rupees. So can you tell me the treatment of this point, point number 2? We have paid the salary to the brother, which is unreasonable to the extent of 5,000. Abhimanyu is saying 5,000 add. Vishakha is saying 5,000 add. Ms. Mehak said 5,000 extent amount add. Absolutely correct. Karv is also saying the same. Very well done. So if any amount paid to your relative, because brother does follow the definition relative, which is excess of FMB, that's going to be disallowed expenditure. So this 5,000 is going to be add back. Moving on to the next. If you solve PGBP question one by one without taking tension of other additional information, you will feel PGBP is one of the most, you can say, easiest among salary, capital gain, and PGBP. So these three topics are gigantic under our income tax act. And most of the students think PGP is the most difficult topic, but I believe no, it is easiest among these three topics. Just you need to understand the information which is given and need to solve it one by one. Advertisement expenses include an amount of rupees 2,500 paid for advertisement published in the souvenir issued by a political party. Payment is made by way of account paid check. So can you tell me the treatment of this under PGBP head? Mehak is saying deduction. No, I am asking under PGBP head. Do not tell me the deduction under section 80 GGB or GGC. This is not the question. What is the question? The question is, what is the treatment under PGBP head? Soumya is saying whole amount will be disallowed. Exactly. Yes, Gav, correct. Aditya, why are you saying less? It should be add back. So this expenditure is a disallowed expenditure. If any expenditure becomes disallowed expenditure, which has already been deducted before arriving at net profit as per accounting, needs to add back. So 2,500 is added back because any payment to political party is disallowed under PGBP. Next is okay, point number 4. Miscellaneous expenses include an amount of rupees 1 lakh paid to political party by check. Again, any payment to political party is disallowed. So this is also going to be disallowed. The fact is 1 lakh disallowed. Next is goods and service tax demand paid includes an amount of rupees 5,300 charged as penalty for delayed filing of return and rupees 12,750 towards interest for delay in deposit of tax. Can you tell me which of these two payments is going to be disallowed? The answer could be both can be disallowed. The answer could be nothing is disallowed. And the answer could be one of them need to be disallowed. So out of this 5,300 and 12,750, what amount needs to be disallowed? Garv is saying penalty. Absolutely correct. All the penalties needs to be disallowed. So 5,300 is disallowed part from point number 5. Next is Mr. Amit had purchased a warehouse building. So you remember there was a warehousing rent under our P&L income, which we did not do anything as section 35 AD does not applicable in that case. But in that case, section 35 AD provides you 100% deduction in respect of those specified businesses. But we can claim depreciation on those assets which is used under the business category if that is a default tax regime case. So Mr. Amit had purchased a warehousing building of 20 lakh rupees. So if section 35 AD applicable, full 20 lakh can claim as a deduction. But because we are under default tax regime, we can claim the depreciation on this value. In rural area for the purpose of storage of agricultural produce. This was made available for use from 15th July and the income from activities credited in the profit and loss account under the warehousing charges. So we can claim the depreciation on it, which is not yet debited. So 2 lakh rupees depreciation can be claimed. Depreciation under the Income Tax Act work out at rupees 65,000, excluding depreciation on warehousing building. So we have added back the depreciation as per accounting, which was 1,07,250. But we need to reduce the depreciation as per income tax. So that is 65,000. I hope it's clear till now. Interest on loan includes an amount of rupees 80,000 paid to Mr. Mohit, a resident, on which tax was not deducted. So now tell me the treatment of this. This is an interesting point. So I would like to see whether you have gone through with the provision, whether you have revised the concept, and if yes, what should be the treatment of point number 8. Garv is saying 30% disallowed. And for non-resident, it's 100%. Absolutely right, Garv. High five from Wi-Fi. Very good. So if the payment is made to a resident on which TDS has not been deducted or deposited, 70% allowed as deduction, but 30% is going to be disallowed. So 30% of 80,000, that means 24,000 is going to be your disallowed expenditure in respect of this income. Now, if you will see, all the treatment has been done. As per PGBP, now we need to calculate the total default tax regime income under PGBP. So after all this, plus minus, our net profit would be 50,340,50. This is PGBP under default tax regime. Now we need to solve PGBP under optional tax regime. So let's take first PGBP as per default tax regime. In that profit, we will make some adjustment to arrive at the PGBP as per optional tax regime. As I've told you, in case of optional tax regime, the section 35 AD special businesses will have separate treatment. So if you will see, out of this section 35 AD income, which has been included in the trading and P&L account was 22,50,000 rupees. So the remaining would be now balance business income out of this income. That would remain 27,840,50. Clear? The depreciation, what we have claimed earlier in respect of this warehouse, the value was 20 lakh and we have claimed 2 lakh rupees depreciation. So the depreciation will not be allowed now and it's going to add back. 2 lakh rupees going to be added back. So the normal PGBP income except the warehousing would be 29,840,50. Now we have to calculate separately the income under section 35 AD. So the charges was 22,50,000. Under section 35 AD, we can claim the full deduction of the building. That would be 20 lakh. So the profit would be 2,50,000. So this is one business income other than a specified business. This would be a specified business income. So aggregate PGBP income of the assessee would be 323,40,50 under optional tax regime. Is it clear, student? Please remember, if there is any question in which these warehouse charges, hotel charges, hospital charges, cold storage chain facility charges, etc. has been given. So you should keep in your mind that in this case, we have to calculate under optional tax regime, separate business income in respect of those activities. Mehak is saying, can you please explain once point number 6? What was point number 6? Point number 6 is related to section 35 AD Mehak. So this is a warehouse business and it says 20 lakh rupees was the building cost, the warehouse cost. And we have received 22 lakh 50,000 as a warehouse charges. So in default tax regime, it does not make a difference whether it's a warehouse business or normal. That rent would be the charge of normal business. So that remains the part of our profit. On the investment of 20 lakh rupees, we claimed a normal depreciation at the rate of 10% of warehouse building under default tax regime. But in case of optional tax regime, we have to calculate separate profit for this warehousing activity. So the rent charges would be 22 lakh 50,000. Out of that, we can claim 100% deduction of 20 lakh. And because we have claimed 2 lakh rupees depreciation, so need to add back to the profit in case of optional tax regime. Next is question number 2, and this is for partnership form. A very, very interesting and very, very important question. In case of partnership question, always remember, you need to calculate the book profit first. And how to calculate this book profit? So the provision says for the purpose of calculation of book profit, you have to add back any interest which has been claimed more than 12%. How to calculate book profit? So net profit after salary and interest to partners. You need to take this net profit, add back all salary to partner. Full amount. You need to add back all salary to partners. And add back any interest if paid more than 12%, excess part of interest. Suppose interest paid to the partner is 15%, then 3% need to be added back. So after adding these 2 points on net profit, you will get your book profit. So always remember this procedure to file or to find out your book profit. Now question says, Messrs. Ravi and Sons, a partnership firm consisting of 2 partners, reports a net profit of 7,50,000. So you can see we have net profit 7,50,000. And remember what it says. It says before deduction of the following items. That means we did not deduct the salary. Still, salary to partner, we did not deduct 25,000 each per month payable to working partner of the firm. So if it has been deducted, then we need to add it back. Like in this example I have written, if net profit after salary and interest, then you need to add back the full salary. And because the question says this is the profit before deduction of salary, so there is no need to add back the salary. Understood? Depreciation on plant and machinery under section 32 is rupees 250. So for the purpose of book profit, you need to reduce it. 2,50,000 depreciation need to reduce because profit means after depreciation, etc. Interest on capital 15% per annum. And the interest on the value of capital is 6 lakh rupees. The capital eligible for interest is 6 lakh. So we can reduce directly the amount of interest which is allowed. If the 15% has been fully allowed earlier, then we need to add back the excess value. But because this interest has not been reduced yet, so we will only claim 15 out of that 15% only 12%. The 12% interest would be on 6 lakh, 72,000. So you'll see if we calculate our profit, now that would be my book profit and it is 4,28,000. please understand the meaning of book profit, because in the examination, it is possible that examiner can give you book profit both ways. Either they can say we have reduced the salary and interest both, or they can give like this question that no salary and interest has been deducted. So if I'll tell you in a detailed provision with the help of diagram, because this is really confusing in the examination that how do we need to calculate the book profit. So examiner can make you confused by framing a question. Let me tell you, there only could be two situations. In case of partnership firm, always remember what is the component of book profit. Always remember, for the purpose of book profit, I need a net profit in which full salary, 100% salary to partner must have been add back. Full salary should have been add back. Okay. And if interest paid, then more than 12% interest should have been added back. So these two things should have been added back to arrive at the book profit. Now suppose there is two situations. The question says the net profit has been given without deduction of salary, which is 2 lakh, and interest, which is suppose 14%. The amount is suppose 28,000. So this net profit has been given suppose 5 lakh rupees. And this net profit says, listen very carefully, it says this net profit is without deduction of salary to partner. 2 lakh rupees salary to partner, we did not deduct it yet. And without deduction of interest at the rate of 14%, which is suppose 28,000. So this profit is without having effect of these two deductions. Now understood. For the purpose of book profit, what do I need? I need a profit in which salary must have been added back. If deducted, okay? If deducted, then it should have been added back. So in this profit, because we did not deduct the salary yet, so there is no need to add back the salary. If the question must have said that this net profit after salary, then I'm going to add it back. But because the question said these are without deduction of salary, that means this salary does not have any deduction to salary to partner. So I do not need to add it back. Then what do I need to do? Is this 14% has been allowed yet? No. If it has been allowed, then the excess 2% I need to add back. But because it has not been allowed, so I will just reduce 12% of interest. So if 14% equivalent to 28,000, that means 12% would be 24,000. So remaining would be my book profit. That would be 76,000. There could be another situation. Suppose the same question says net profit after deduction of salary 2 lakh rupees and interest 14%. So this net profit, suppose 5 lakh now. After these two deduction, now how I will calculate the book profit? I'll take this net profit. I will add back full salary because salary has been already deducted. So I will add back full 2 lakh rupees salary and I'll add back the interest of 2% only, which is actually disallowed. So 2% would be 4,000. So in this case, my book profit would be 5,24,000. So even a single word will change the calculation of book profit if you skip that word in the examination. So this is a word you have to understand after deduction or without deduction. And if you actually understand what is the logic of book profit, that if do I need to find a book profit, it should be a profit which is without having the deduction of salary to partner at all, and after allowed only 12% deduction of interest to partners. So in the given question, if you'll see, the question says that the net profit of rupees 750 before deduction. So that's why, because the question says it is before deduction. So we reduce the depreciation as usual, and we just remove 12% of interest to partner and did not do any treatment of salary. So this is my book profit. Now, can you tell me how much salary is allowable under Income Tax Act? What is the maximum permissible limit of salary under income tax on the basis of book profit? Or tell me how much salary would be maximum allowed on this book profit of 4,28,000. Can you tell me? Yes, good. It's 2 slabs. Absolutely right. So tell me what should be the eligible amount? What should be the maximum salary allowable under income tax? The maximum salary on the basis of this book profit, 4,28,000. So the first limit says up to 6 lakh, 90% of book profit. So we need to take the 90% of 428, that would come 3,85,200, or the fixed limit of 3 lakh, whichever is what it is, whichever is higher or whichever is lower. Let me see who will tell me. Gaurav is saying higher. Well done, Gaurav. Whichever is higher. Absolutely correct. So that's why whichever is higher. So I will take 385, 200. This is maximum allowable salary as per income tax, but this is not the allowable salary. For the purpose of allowable salary, now we need to compare this salary with the salary which is as per accounting or as per deed. So as per deed, if you see, the total salary would be 6 lakh rupees. 25,000 into 12 for 2 partners. That would be 6 lakh. Now this would be the allowable salary under income tax. Now what it is? It's lower or higher? Now it's lower. So the allowable salary under income tax would be 3,85,200 rupees. And if you want to find out the net profit, the simple rule is whatever allowable salary is, just reduce it from your book profit. So the answer is always book profit minus allowable salary. So 4,28,000 reduced by 3,85,200. So the correct answer would be 42,800 rupees. The business income would be 42,800. But the question did not complete it yet. There is a carry forward loss of last year, 50,000. And we can reduce that loss from this income. So PGBP income would be nil. There would be still losses what we can carry forward for future. So the requirement of question was book profit. We have find it out, an amount of salary that can be paid to working partner also we have calculated. There was no need to calculate this net profit and a set of provision. The question was only point number 1 or 2 and we have solved it. Any problem in this solution, students? Is that clear? Sure. Next is Mr. Jain and his wife, Mrs. Jain, are partners in a partnership firm holding 25% share each. So there's an interesting question. There was a provision under clubbing you must have gone through. If both the spouse is having substantial interest in a organization. Okay. In that case, what is the rule? The rule says the partner is having the spouse and the wife who is having the higher income other than that salary which they are receiving from that organization without qualification. The clubbing would be done in the hand of that person. So during the financial year 25-26, the firm paid rupees 2,50,000 to each of them as remuneration. Apart from this, they provide you the following information in respect of financial year 25-26. Let me tell you, if there is qualification for this salary, then there would not be any clubbing. The information must have been given in the question, and you can say you are required to compute the gross total income of Mr. and Mrs. Jain as per the provision, assuming that they have shifted out of the default tax regime. So let's see, the income information has been given. Mr. Jain and Mrs. Jain. Clear? Now, first of all, we need to see the other income. Then we will find out in whose hand this income is going to be clubbed. Salary received by Mr. Jain from his employer is 12,50,000 rupees. So the salary income of Mr. Jain is 12,50,000. And because he is under optional tax regime, deduction would be, standard deduction would be 50,000. And the remaining net salary taxable would be 12 lakh. Clear? Interest on fixed deposit earned by Mrs. Jain is rupees 14 lakh rupees. The fixed deposit opened by using her is Tridhan. So that means this is income from other source of Mrs. Jain of rupees 14 lakh. Income of 3 minor child, Meeta and Sita, 15,000, 10,000, 2,000 respectively. So these income also going to be clubbed in the hands of the parents having higher income, except including these income. Is there any other income given? No. So before including these children income, we have to find out whether who is having the higher income for clubbing of this remuneration. As you can see, Mrs. Jain is having higher income in comparison to Mrs. Jain. So the salary she received for herself, of course, become the part of her income, 2,50,000. And the salary of her husband, that is also going to be clubbed under salary head as 2,50,000 rupees. Sorry, it's not the salary. This is a partnership firm and it's paid 250 as remuneration. So I beg your pardon, it's not salary, it would be business income, because if a partner receive anything from its partnership firm, whether interest, profit, and salary, that would become the part of business income. So that would be business income of Mrs. Jain, that would be 5 lakh rupees. Now you can see, because the income of Mrs. Jain is higher than Mr. A, so the clubbing of these income would also part of Mrs. Jain income. And because we are under optional tax regime, so we can claim an exemption of 1,500 rupees or the income clubbed, whichever is lower, as exemption under section 1032. So the clubbing value would be 13,500 in case of Nita. In case of Meeta, it would be 8,500, and in case of Sita, it would be only 500. Total clubbed income 22,500. So the aggregate income of Mrs. Jain would be 19,22,500, and the income of Mr. Jain would only remain rupees 12 lakh. Is it clear, students? Any confusion in this question? Okay. Moving further, next question is, so this question you need to answer. Very simple, very, very easy question. I guess easiest question from all the question we are going to solve. Mr. Aman has furnished the following particulars relating to payments made and expenditure incurred towards scientific research for the year ended 31st March 2026. Okay. Payment made to AB University. So this is a question of scientific research. And let me see the requirement of question. The question says compute the deduction available under section 35. of the Income Tax Act 1961 for assessment year so and so while computing his income under PGBP under default tax regime. So you need to tell me the default tax regime deduction in respect of scientific research expenditure in this question. So you can see this a question is in front of you. There are 4 payments. Can you tell me the payment for which we can claim the deduction in this question under scientific research expenditure? Garv is saying, okay. Anyone else? Under default tax regime, which scientific expenses are allowed? Garv, you are absolutely correct. I'm waiting for other students' answer. Abhimanyu is saying 15 and 12. Mehak is saying disallowed. Matlab, as per Mehak, nothing is allowed. All expenditures are disallowed. Okay. Anyone else? Vishakha is saying machinery purchased. Adit is saying 15 and 20 lakh. 15 and 12, sorry. Anyone else? So the correct answer is, let me tell you the provision. The provision says, in case of default tax regime, only scientific research expenditure which has been done for in-house scientific research is allowed. Only in-house scientific research. So out of these 4 payments, if you will see, only this 4th category is for in-house research scientific expenditure. So only this one is allowed. All 3 are disallowed. Solved. Question number 5. Again, a long question. Ms. Farah, age 40 years, is an advocate. She keeps her books of account on accrual basis. So again, it is on accrual basis. Whenever there is accrual basis, the net profit plus allowed, disallowed, that scenario needs to be followed. Her profit and loss account for the year ended on March 31, 2026 as follows. Let me see the requirement of question. All the information has been given and you can see it's a big question. Compute the total income and tax liability as per most beneficial. So what we will do, we will solve it, the PGBP part under both the regime. We will take the net profit, which is 25,91,000. First of all, always solve as per default tax regime. So 25,91,000. Fees earned from taxation services, allowed. Appeals, course, consultancy, obvious. Dividend, of course, it's a part of income from other source. So this is not going to be the part of the income of Farah. 11 lakh. Interest again, income from other source, 25,000. Honorarium received for valuation of answer paper. So what do you think? This is going to be the part of her business income or income from other source? Garv is saying income from other source. Absolutely correct. Well done. Rent receipt, of course, the part of house property. So this is also going to be reduced and 50,000 also going to be the reduction from business income. Moving on to expenses side now. So salary to staff, of course, okay, rent, administrative expenses, incentive, meetings, seminar and conferences. Now, a very unusual thing has been written over there, that is purchase of car for official use on 1st July 25. So this is a capital expenditure and it has been written in our calculation of profit and loss account. That is completely wrong. So we have to add it back, this expenditure, and we need to find out the depreciation for the allowability, not the value of the car. Clear? So 3 lakh was this. Repairs and maintenance of car was 35,000. Traveling expenditure 5 lakh. Municipal tax paid in respect of house property. So that is not again the part of business expenditure. When the income is under income from house property, then the expenditure will also go where? Income from house property. So that is also going to be added back. Okay, clear till now? That was 9,000 rupees. Next, additional information. Administrative expenses includes rupees 50,000 paid to a tax consultant in cash for assisting Farah in one of the professional assignments. So we cannot pay cash more than 10,000. So again, this is also going to be disallowed. Traveling expense includes expenditure incurred on foreign professional tour of 50,000 was within RBI limit. So do not need to do anything because it is for business tour and allowed by the RBI also. Farah paid medical insurance premium for her partner, senior citizen and not dependent, her parents, senior citizen and not dependent, online amounting 47,000. He also pay 8,500 by cash. So this would be the part of deduction for medical insurance premium, etc. Repair and maintenance of car is for the period from 1st October 2025 to 30th September 2026. So let me tell you, the repair of car was 35,000 rupees, which was given in our profit and loss accounts. Can you tell me the treatment of this? Do we need to do something or we should not do something? This point number 4 is having any effect on the expenditure of repairs and maintenance of car, which has been given in the question, rupees 35,000. Vishakha is saying only 6 months is allowed, but is not under 43B. Well done, Vishakha. Absolutely correct. Because the accounts has been maintained on accrual basis. So the repair and maintenance, which is up to 31st March 26, needs to be the part of expenses. The repair and maintenance, which is for from 1st April 25, 26 up to 30th September 26 will be disallowed. That means 50% of it. So 17,500 is going to be added back. Now we have left with the depreciation of cars. So it was 3 lakh put to use for 1 July. So depreciation of car rate is 15%. So we can claim a deduction of 45,000 rupees regarding it. So after doing plus minus, you will see that the answer would be 1657500 as per default tax regime. And there is no difference in this question in calculation of business income under default tax regime or optional tax regime. The answer would be same in both circumstances. Clear? Next, Mr. Piyush runs a sole proprietorship firm and owns 4 machines. Okay, what is the requirement of the question? The question is asking you to calculate the depreciation value in this question, capital gain, if any, liable to tax, and section 35 deduction if he has shifted out of the default tax regime. So now from this perspective, now we will solve this question, or we will read this question actually first. Mr. Piyush runs a sole proprietorship firm and owns 4 machines which was put to use business in March 2024. The depreciation rate is 15, the WDV of the machine. So on 1st April 25, the WDV is 7,70,000. 2 of the old machines were sold on 15th July for 10 lakh rupees. Got it? So on 15th July, the money received was 10 lakh rupees. A new machine has been purchased. So for that, we'll take actual cost of the asset. And that has been purchased in, let me see, a second-hand plant was bought for 6,10,000 on 30th December. So it was 6,10,000. Now we need to calculate the depreciation. But first of all, because the machine has been sold earlier, so this opening WDV of the block has been completely exhausted. Even there is money received left for the purpose would be 2,30,000 remaining. And that this 230 is going to be set off from the new machine value. So the remaining value would be 3,80,000. And this 380 belongs to the new machine, which has been used for less than 180 days as it has been purchased and put to use in December. So on 380, we will claim the depreciation that would amount to half rate, because machine 7.5% of normal rate, it would be 28,500 rupees. So the first answer was what is the depreciation? And as you can see, the new machine purchased has been a second-hand machine. So you cannot claim additional depreciation. Now they're asking, would there be any capital gain to tax? In case of capital gain, and specifically in case of depreciable asset, the capital gain can be claimed if the money received exceed the WDV value, opening WDV value, as well as any asset purchased during the year. Then you can claim it short-term capital gain. Or if the whole block of assets cease to exist. But if whole block of asset does not cease to exist, and if there is value left and machine left, and the money received does not exceed, in that case, the depreciation you can claim on the value under PGBP head, not capital gain. Let me show you how. In this example, if you go for a capital gain calculation, you will take the sale consideration, which is 10 lakh rupees. For the purpose of capital gain, you need to reduce the opening WDV of block of asset, that is in question 7,70,000. And then you need to reduce actual cost of asset purchase, which is 6,10,000. So that would result in a loss of 380. Now the provision says if one or more asset has been transferred, if one or more asset has been transferred and the block does not cease to exist, in that case, if there is a loss, then there is no treatment under capital gain. On this loss, you can claim depreciation under PGBP head. Yes, in this example, suppose if the sale consideration is 20 lakh. So now that means money received is exceeding opening WDV and actual cost of the asset. In that case, there could be a capital gain. In short, we can say, in case of depreciable asset, if block does not exist, if block does not cease to exist, if the block remains, then only there could be short-term capital gain. There could not be a calculation of short-term capital loss. If there is a loss, you can ignore it because it automatically gets the benefit of depreciation under PGBP head. Okay. Next is deduction under section 35 if he has shifted out of the default tax regime. So they are now asking you the deduction for scientific research. And in this example, you can see this will be allowed as deduction, but this is payment made to Satyavati College. It has not been written, it is approved, etc. So only 15 lakh could be claimed as deduction under section 35. Any problem in this question, students? You can ask. Okay. Moving on to question number 7. Mr. Ashok, age 61 years, A resident individual engaged in a wholesale business of a stationery product provides the following information for year ended so and so. He's also a partner in UVW and Company, a partnership firm. Let's see the requirement of question first. You are required to compute the total income and tax liability, assuming he opts out from the provision of section 115 BAC. That means we need to calculate the business income under optional tax regime. For the purpose of optional tax regime, we need to consider things one by one. So interest on capital from UVW and Company at 14% in accordance with the partnership deed. Now I have a question for all of you. Please listen carefully, then apply the provision and then give me the answer. My question is, in case of a partnership firm, when the firm gives salary or interest to partners, then what portion of that salary is going to be taxed in the hands of the partners? Listen very carefully. You have two options. Again, listen to the question. When a partnership firm pays salary interest to its partner, then what portion is going to be taxed in the hands of partner under their PGBP Act? The allowable part of salary or interest, the allowable salary or interest to a partnership firm, or the disallowed part of that salary or interest to the partnership firm. Suppose, let me tell you, suppose a partnership firm paid 10 lakh rupees as a salary. Okay. Out of this 10 lakh, 8 lakh allowed to the partnership firm as expenditure and 2 lakh disallowed. Now, my question is whether 8 lakh is going to be the part of partner's income or 2 lakh is going to be the part of partner's income. Think about it and tell me. Girl को सब पता है पहले. Well done, girl. Very well done. Girl is saying something. Abhimanyu is saying 8 lakh rupees. Anyone else? The allowable part or disallowed part? Aditya is saying 8 lakh. Abhimanyu is also saying 8 lakh. And Garvid also answered 8 lakh. Absolutely correct. Fantastic. Gayatri also saying 8 lakh. So the allowable portion is always going to be taxed in the hands of partners. So in this question, you can see interest on capital from the partnership firm at the rate of 14%, which is 140. So out of this 14%, how much is going to be allowed to the partnership firm? 12%. 2% is going to be disallowed. So this 12% is going to be the part of Mr. Ashok income. That is also under business head. So allowable salary would be the part of Mr. Ashok income. 1,20,000 rupees. Clear? Share of profit from the firm is 44,000. Can you tell me the treatment of share of profit which is received by a partner from the partnership firm? Is it taxable or non-taxable in the hands of partners? Exactly, Gaurav. Absolutely correct. Correct, Vishakha. Exempt. It is exempt. So this not need to do anything. This is exempt income. Next is salary as working partner. Fully allowed in the hands of the firm, net of TDS. So that was interest which has been received. Now this is salary. Fully allowed, net of TDS. So I believe when you have completed the TDS provision, if there is any income on which TDS liability arises, and if that is given in the question with the word of net or received, that means it is after deduction of TDS. So we have to make it gross. What is the TDS rate in case of payment from a partnership firm to partner under section 194T? What is the TDS rate? Because we need that TDS rate for the purpose of grossing up. Absolutely correct. It's 10%. Garg. So in that situation, you can see because the TDS rates must have been deducted at the rate of 10%. And after 10%, the income is 90,000. So we need to gross it. And for the purpose of grossing up, we will take 90,000 divided by 90 into 100. So that will be salary income because it's fully allowed. So we will take the full value as 1 lakh rupee. Clear? Interest on bank deposit, this is other source. So we will skip it. We will only take those income. Those will fall under PGBPL. Interest on saving, income tax refund. Again, net profit from a wholesale business. So this net profit we need to take 6,60,000 rupees. Amounts debited included the following. Depreciation as per book. We have to add it back in that 6,60,000 rupees. Motor car expense would be allowed. Municipal taxes for the shop. For 2.5 years, payment for 1.5 year made on 12th July 2025, and for the other half year, it has been paid on 31st December 2026. So you can see municipal tax falls under section 43B provision, in which it says if the payment has been made up to the due date of ROI, then you can claim the deduction in the same tax year. Out of this payment, 50% has been paid before due date of ROI. And the balance has been on 31st December 26. So that means the 50% has been paid after the due date of ROI would be disallowed. So 3,500, I'm writing over here only. So out of this, 3,500 is going to be add back. Clear? Salary to manager by way of a single cash payment going to be disallowed. Now the WDV of the asset, one by one, we have to calculate. The WDV of the asset on 1/4/25 used in above business are as follows. On computer, the rate is 40%. So depreciation is going to be disallowed 96,000. On computer printer, the rate is again 40%. So 60,000 would be your depreciation. In case of motor car, acquired on 31st December 25 and 20% for personal use. So all car expenditure would be 20% disallowed. You can only claim 80%. So on this, the rate would be half 7.5%, and that would be only 80% part you can claim as a depreciation. That will amounts to 40,800. There was a car expenditure of 40,000, and now because now we know that the car has been used 20% for personal, so this motor car expenditure is disallowed 8,000 rupees also. After doing this all plus minus, the correct answer would be 750,700. I hope it's clear, students. Other information is for deduction, etc. Next is question number 8. Mr. Sahil, a resident Indian, age 40 years, a manufacturer at Chennai, gives the following information of trading in P&L, etc. We have given the manufacturing, trading and profit and loss account for the year. Then the profit has been given. Additional informations are there. And the last but not the least, we have to find out the requirement of question. As you can see, it is asking to compute the total income and tax liability of Mr. Sahil for the assessment year 26-27 if he has exercised the option of shifting out of the default tax regime. So shifting out of the default tax regime matlab optional tax regime we have to follow. Yes, absolutely. So now we will read this question and solve one by one. The net profit has been given 9,492,000. So this is our net profit. Now, from starting, we are seeing sale, closing stock, everything is allowed as income. Dividend is 1,05,000. Lottery, 73,500. Profit on sale of share, 3,15,000 rupees. This we are doing question number A. Mr. Sahil. This question is one correction. I will let you know when that point will come. So profit on sale of share, that is 3,15,000. Any other information? Not in credit side. Yes, winning is net of TDS. TDS in section 194B is applicable. But that will work for income from other source and for calculation of your tax liability. We are just considering those points, those related to our business income. Okay. Okay, so now let's see on the debit side what we can add back if there's anything disallowed. Administrative charges, wages, all are allowed. SGST penalty paid. It is not compensatory nature. So this 49,000 is going to be disallowed. GST paid is okay. To general expense, to miscellaneous expense, to loss on sale of share. Again, this is capital gain. We have to add it back. 140. Interest to bank on term loan. Not a problem. Now depreciation. Administrative charges include rupees 46,000 paid as commission to brother of assessee. The commission amount at the market rate in rupees 36,000. So the question says that the commission charges is 46,000, out of which the market value is 36,000. And because the payment has been made to the brother who is a relative, so in this situation, the 10,000 would be disallowed. Next is the assessee paid rupees 33,000 in cash to a transport carrier on 26/12/2025. The amount is included in manufacturing expenses. Assume that the provision relating to TDS are not applicable. You must have remembered, but as there was a provision which says if the payment is made to a person in a single day exceeding 10,000, that is going to be fully disallowed. But in case of transport, the limit is, what is the limit in case of transport? Please tell, what is the limit in case of transport? Yes, in case of transport, it's 35,000 rupees. And because in this example, the payment is 33,000, which is within the threshold limit of 35,000. So we do not need to do anything with point number 2. Bank loan interest actually paid on 31st March 2026 was rupees 1,40,000 and the balance was paid in November 2026. The balance has been paid in November 2026. So now section 43B says that if the payment made to bank in respect of interest on loan, etc., then if up to the due date of ROI it has been paid, then the deduction would be available, else it would be not available. The interest on loan was given in the question is 4,20,000, and it says out of this 420, 140 has been paid up to 31st March. And the balance was paid in November 26. That means after due date of ROI. So in this situation, the disallowed amount would be balance amount, which is 2,80,000 rupees. Clear? Next is, suppose if it is in place of November, it is July, then the full amount would have been allowed and we do not need to do anything with this point. Miscellaneous expense include rupees 10,000 contribution to Prime Minister Relief Fund. So for this, you can claim a deduction under section 80G, but you cannot claim this as an expense of business. So this is going to be disallowed again. Loss on sale of share represents shares sold within a period of 6 months. So that is for long-term, short-term cap gain, nothing to do with PGBP. Profit on sale of share again, part of gain. Housing loan repaid is the part of house property provision. We have concerned with depreciation calculation. It says opening WDV on 1st April 25 is 84 lakh. Additions during the year, very interesting point. Additions during the year used for more than 180 days is 14 lakh. Total additions during the year is 28 lakh. Ignore additional depreciation. So can you tell me if the opening WDV is in this question is 84 lakh and additions more than 180 days is 14 lakh. Then how many additions in this question for less than 180 days? Is there any these kind of addition or there is no this kind of addition? So please read the question. Please read the information very carefully. And maybe you will able to find out what exactly examiner wants you to do. So the question is, opening WDV has been given 84 lakh. And if addition is more than 180 days of rupees 14 lakh, then how or what amount of addition is less than 180 days in this question, or there is no such addition is there? Nikita Kumari is saying 14 lakh less than 180 days. And Lakshmi is saying 14 lakh. Simran is saying 14 lakh more than 180 and 14 lakh less than 180. Very well done. Everybody is given the correct answer. Well done, students. High five from Wi-Fi from my side. Chalo. आज तो हाथ भी नहीं दिख रहा मेरा. Green background is not there. So because this is called total addition 28 lakh in the year. And if the second point is saying out of this 20 lakh, 14 lakh is more than 118, then silently the question is just telling you that 14 lakh is less than 180. So we will claim depreciation at the rate of 15% on this, and we will claim depreciation on 7.5% on this. So our total depreciation would be on above value, it would be 147,000, and the half depreciation would be 105,000. After reducing these depreciation, you will get your answer, which would be 93,125,000. I hope it's clear. Any confusion? Any problem in this solution? Please tell. Look, we are solving the questions, the type of question which has been asked in the examination. And do you realize, students, that nothing is difficult in PGBP head? They are, you can see, huge questions. These are not simple questions we are solving. These are huge questions. The kind of compulsory questions is going to be asked in the examination, and it always happens that the majority part belongs to PGBP provision. Suppose it is a question of 15 marks. Then I believe out of that 15 marks in which you are asked to calculate the total income and tax liability, almost 8 or 9 or 10 marks actually for PGBP provisions. And if you solve a PGBP question step by step, by reading the information, by understanding the information. What is in PGBP? Either so that amount is going to be reduced or add back, or there would be no treatment. So it is not difficult. The problem is when we read the information, we do not read it correctly. You need to read first, you need to apply the provision, and then you start solve that question. Even I believe that a full 15 marks question is very difficult to solve in the examination, but at least you should focus that at least PGBP part. And if this house property information and like income from other source, like calculation of total income should not be wrong. I believe it's always calculation of tax is a tricky thing because there could be special rate of taxes also apply in case of casual income, in case of capital gain, and then slab rate for other income, then rebate concept could be there, surcharge provision, cess provision, etc., etc. I do believe it is difficult, but at least the calculation till total income should be correct. And it majority depends upon how you solve the PGBP part. So read it properly, analyze the point, and then do the treatment. Rather than being panic after seeing that kind of gigantic question, a lot of students think this cannot be solved. No, it can be solved with the right planning and the right preparation. As I always say, dream it, plan it, do it, you will get it. So these four things always work. Whatever you want to dream it. Then your next step, dreaming is not only the thing which will solve everything. You have to plan for it. You have to do hard work, study, revision, etc. Then you have to do it. So after planning, you have to execute your plan also. Only making plan, only making schedule, I will read this, I will revise this would not work anything. You have to work on it. So then you have to do it. And if you these three things are going correctly, dreaming, planning, and doing it, you will get it, whatever it is in your life. Okay? Chalo. Question number 9. Mr. Raju has commenced business on 1st April 2025. He finished the following information regarding the payments made towards scientific research during the financial year. Revenue expenditure on scientific research. Of course, if there is a scientific research question, I do believe in more than 90% cases, it would be for optional tax regime. Because in case of default tax regime, only one expenditure you need to allow, and that is for in-house scientific research. So if it is a 4 marks question, it has to be under optional tax regime. So you can see this is under optional tax regime. We are going to solve it. One by one, I will read the expenditure and I will ask you whether it's going to be allowed or not. Okay, let's do it together. First is revenue expenditure on scientific research incurred during the year 1 lakh. Tell me, allowed or disallowed? Garv is saying allowed. Very good. Vishaka is saying allowed. Abhimanyu allowed. Dhanlakshmi allowed. Gayatri allowed. Aditya is saying disallowed. Why Aditya? Why disallowed? Tell me the reason why you think it's disallowed. It's a normal question. Very simple. It has to be allowed. Oh, Barna is also saying allow. Revenue. So how does it matter revenue? Whether expenditures on revenue or capital expenditure except land, everything is allowed. Okay. So technically that is going to be allowed. Next is capital expenditure for scientific research, rupees 3 lakh. What should be the treatment, students? Allowed or disallowed? Nisha is saying allowed. Vishaka is saying allowed. Allowed. Mahek is also saying. Gav is saying allowed. Nikita is saying 1/5 will be allowed. कहाँ पढ़ा दिया हमने 1/5 allowed होता है? Scientific research में कब पढ़ा है? Preliminary expenditure में it could be possible. Not in scientific research. Dhanlakshmi is saying not allowed. Why not allowed? Except land, all capital expenditure allowed. Correct. 3 years not ended. These are current year revenue and capital expenditure. It is not pre-commencement revenue expenditure. If in the current year you are also running your scientific research, those information has been given. There is no concept of 3 year in this case. Normal question, why you are making it complicated? Allowed. Contribution to notified approved research association rupees 1,50,000. Allowed or disallowed? Yes, it is in-house Lakshmi. That's why it was allowed. Point number 2 we are talking. Chalo, Abhimanyu allowed, Varna allowed. You are saying it is allowed. So contribution to notified approved, allowed. Absolutely allowed. Next is amount paid to H Limited, an Indian company which has its main object scientific research and approved by the prescribed authority. What should be the treatment? Allowed or not allowed? Point number 4 we are discussing. Allowed, allowed. Let's see if there is any. Correct. Next is this is allowed. Point number 5 is allowed. Of course, absolutely allowed. Next, he also incurred revenue expenditure. Point number 4 allowed. Point number 5 expenditure of 2,50,000 toward purchase of land for scientific research. So what should be the answer in respect of point number 5? Land is disallowed. Absolutely correct. Well done. Point number 6. He also incurred revenue expenditure of rupees 2 lakh towards salary of research staff in financial year 24-25 and certified by the prescribed authority. This is a 4 marks question. Imagine. What should be the answer of point number 6? Whether it should be allowed or disallowed. Let me see the answers. Point number 6 is allowed expenditure, of course. So point number 6 is also allowed. So all the allowed expenditure, if you aggregate, the answer would be 10 lakh rupees. This is for 4 marks. So let me tell you one thing. Generally, what happens in examination, we generally don't score good marks due to one reason. Or maybe we are not going to have that 40 marks or that 50 marks, which is for passing criteria. Because if you solve a question which is this much easy, which you know all the provisions, still if you are going to do some kind of mistakes in these kind of questions, that will really going to hurt you a lot. So please try to minimize your errors. That is also a trick to increase your marks. So in a game also, whether you are playing cricket, whether you are playing tennis, whether you are playing badminton, football, the one thing is your talent. How you can score a goal, how can you hit a four or a boundary, or how can you score a point against your opponent. This is on your skill. But there is one more thing, that do not do silly errors. So in the cricket, whether it's football, if you are doing silly error also, that will also going to cost you a lot. So the questions, let me tell you, those questions like 4 marks, maybe this is for residential status questions, like set of questions, income from other source, TDS provisions, these are the topics. And out of these topics, there will be question like 2 marks, 3 marks, 4 marks would be in the examination. So try to do minimize your errors in these questions. Try to score full marks in these kind of questions. A huge question, the difficult would always be there. for doing mistakes. But why do mistakes in simple questions? So try to minimize your errors. And there's only one way to do that: practice. The more you will practice, you will stop doing these kind of errors. Now, let me tell you, if this kind of question will come again in the examination, what will happen? Suppose there is a student who did not practice these kind of question, what we are doing in MTP, RTP, etc., and you are doing in MTP, RTP, previous year question. He has same knowledge as you have, but you have practiced those questions multiple times, and he did not practice those questions that much. What will be the difference even when you both know the provision? One, you will be more confident to solve that question. Maybe he will also able to solve the question. Now, what would be the second difference? If you both are able to solve those questions, you have solved that kind of question multiple times. So you able to solve that question also. He did not have that much practice, but he will be able to solve that question also because he is also having the knowledge of all the provision. But you know what would be the difference still in this solution? A very important difference would be there. What it would be, which is very, very vital from the point of view of examination. 6 point is previous salary. Why allowed? Lakshmi is asking. Revenue expenditure of 2 lakh, because for 3 years you can claim that salary. No? So in this year it has been certified, so you can claim that. I was asking something else. The speed exactly matter. You would be able to solve that question maybe within 5 minutes. Maybe he or she will take 7 minutes or 8 minutes. And that would be a major difference. Even if you are not understanding this time, the time is very crucial at the time of examination. The more time you will have, the more you will able to solve other questions. You will give your time to solving that compulsory question or difficult question. So you much have more timing. And when you will have time, you will have confidence. You will not panic in the examination. A major problem is that is also. Even you know the solution, but there is time shortage is there. So you have to uh, design your solutions, or you can say you have to attempt your paper in a time bound manner. You need to know if there is a 4 marks question, how much time do I need to devote? And if it is taking more time in solution, you need to skip it. So a smart student is that student who is not indulge in the same question, even if when he knows it is actually consuming his a lot of time. If you give more time in a question, that exactly you are doing errors and your marks are actually decreasing. So please remember it. I believe for that kind of advices, there must be a single class for all of you after these LVRCs over, okay, in which we will discuss how to attempt the paper, how to do the time management, how to do revision at the last point of time, etc. Please do join that class. That single class will help you to at least increase your 10 or 15% marks in the examination without doing extra effort. Okay, chalo. So I guess now time for a break. Let me see if there is any query. Yes, DT is the longest, but it is the most interesting subject also. Mehak, yes, salary, PDF, etc. has been uploaded. You can download it. Garb wants to ask something. So can we unmute Garb?
Good morning, sir. Sir,
Good
am I audible?
thing.
Good evening.
Please,
Good evening.
little louder, Garb. Little loud.
My question is from a model test paper. Can you open it?
Your voice is not clear. Can I? What?
Can you open the model test papers
Which
from
one?
ICAI? May 2026.
No, I don't have that now. You have to tell me before. I don't have the May examination,
Okay.
etc.
Model test papers.
No, we
Uh,
have just solving these questions which has been written to MTP, RTP, etc.
so I can tell then later you can solve the query. Yes.
You can
I,
send that query to the BOS and they will send it to me and then we will reply for your query.
so the portal isn't working. Very
Exactly, it's
good.
not working. It will work after 1 or 2 days. Just have patience. It will work definitely. We are also, matlab, in a mess due to that portal. That's why uploading of documents was difficult.
Okay, sir.
So, Ashok sir, can we go for a break? have your coffee, tea, etc. So let's solve other questions. So we have discussed till question number 9. Let's move on to question number 10. Mr. Raman, a resident individual aged 62 years, is engaged in the business of manufacturing and sales of spare parts for motorbikes as a proprietor. He prepares his accounts on mercantile basis. This business is carried out on the ground floor of a two-storied commercial building. A very interesting question is there. Owned by him. You can see a two-story building and the business is running on ground floor. The WDV of the value, so this ground floor value WDV has been given 8 lakh in which business is running. Clear? As on April 1, 2025, the statement of profit and loss for the previous year ended on 31st March shows a net profit of 11.25 lakh before taxation and depreciation debited to create the following items. So now we have, as you can see, the net profit which is given in question is 11,25,000 rupees. Clear? And this is before taxation and depreciation after debiting creating the following items. Now, administrative expenses includes 9,525 paid towards interest on delay in deposit of GST. So is it allowed or disallowed, student? Is it allowed expenditure? Because in case of indirect taxes, all taxes, interest and fees are allowed. Only penalties are disallowed. General expense include a sum of rupees 3,88,000 paid to a non-resident as fees for technical services without deduction of tax at source. So what is the treatment of this? Whether 30% disallowed, whether 100% disallowed, whether full allowed, what it is? Girl is saying 100% disallowed. Vishaka also saying 100% disallowed. Nikita 100%. Very good. So because the payment is made to a non-resident and if TDS compliances has not been done, then full amount is going to be disallowed. So that means in this case, this 3,88,000 rupees disallowed. Next is fire insurance premium of 66,000 for the entire building remain unpaid till 31st March 2026. So on the basis of accrual, we can claim it, but this is for entire building. As you can see, there is two part of building, ground floor and first floor, and the business is running only at ground floor. So the other part deduction we cannot claim under business head. So this is going to be disallowed completely. Okay, we did not read the requirement of question. Let's do it before solving further provisions. Compute the total income and tax liability under both the regimes. We are solving it under, first of all, default tax regime. Moving on to point number 4. Expenditure of rupees 75,000 was paid to a scientific research association approved under section 35, out of which 75,000 rupees 50,000 was utilized towards the purchase of land by the research association. So what should be the treatment of this expenditure, student? Whether it should be allowed, disallowed, partially allowed or disallowed. Garg is given the answer. Dhanlakshmi is saying 75,000 allowed. Aditya is saying 25,000 taken. Gayatri is saying 25,000 allowed. Nikita is saying partially allowed. Anak is saying partially allowed. Nikita is saying 50% disallowed. Student, you have just forgot that we are under default taxes. As we saw today, almost 2 and 3 questions relating to scientific research, and I told you only in-house scientific research expenditures are allowed in case of default taxes. And in this case, the payment has been made to another association, approved association. So nothing is going to be allowed. You might be confused due to that land value, etc. And examiner knows that. So they're just trying to confuse you. Chalo. He let out first floor of his commercial building to Mr. Aman on April 1, 2025 and received rent of 35,000 per month. Municipal taxes rupees 20,000 relating to the building were paid equally by both Raman and Mr. Aman. Rent receipt was credited and municipal taxes of 10,000 of the ground floor was debited to the statement of profit and loss account. Now, can you tell me the treatment of this paragraph? This paragraph is having multiple information for you. It is saying first floor is let out. If you will draw this and understand this point, you will be able to find out it very easily. This is our ground floor. This is for business. This is our first floor and it is let out. It says this is let out for 35,000 per month. Rent paid is 20,000, for which 10,000 of the ground floor has been debited to P&L account. And this 35,000 is credited to P&L account. Now, this is the information in this paragraph. Now you can easily find out what is going to be done with this information, what is allowed and what is disallowed. So what should be the treatment of this information in our PGBP? 35,000 is per month, okay? 5K goes to GAV and NAV reduced by 5K. What is that? 5K, deduct 35,000. I am just asking the treatment under PGBP. 10K goes to PGBP. I am just asking for this point number 5. What should I do with point number 5 in our PGBP? Do I need to add it back some value or should I reduce something? Just give me the answer of that question. Vishakha is saying no treatment. Very bad. Garv is saying reduce 35K per month. Correct. Dhanlakshmi and Garv, you are correct. So the question clearly say that the amount has been debited or credited. So you have credited the rent in your business head. So 35,000 per month. That means for year it's 4,20,000 rupees needs to reduce from your business profit. That was 11,25,000. And the rent is only that part of debit which is related to ground floor, and ground floor is for business purpose. So no treatment of this 10,000. Only this 4,20,000 needs to reduce. This is a very, very, very interesting question. Chalo. He sold a piece of land of 44 lakh on 12th April 25. He had acquired the land on so and so. The gain of 4 lakh is again credited to the statement of profit and loss account. So what should I do? Again, I need to reduce it from my business income. Now, these are additional information. The above informations were those information which has been treated under PGBP head. But these, what we are discussing, these are additional information. That means the treatment has not been done yet under business head, or if it has been done or not, that would be given in the additional information. And additional information, point number 1 is regarding section 43BH, that MSME payments. So please read very carefully and then I will ask you what to do with this. Mr. Raman purchased raw material from Messrs. Paul Industries, a micro enterprises for rupees 49,000 on 10th March 26. However, the payment to Messrs. Paul Industries was made on April 5, 2026 by check. No written agreement for payment exists between Messrs. Paul Industry and Mr. Raman, another supplier. So first of all, we have to solve this information. So in case of no agreement exists, what do we need to do? In case of micro and small enterprises, if there is no agreement exists, then within how many days we do need to pay? Then Lakshmi is accurate. It's 15 days. So if within 15 days the payment has not been made, then that amount cannot be claimed as deduction. As you can see, in this case, the payment has been made after 15 days. So 49,000 is going to be disallowed. The next is another supplier, Messrs. Carl Industry, are small enterprises with whom also no agreement existed for payment was made on 1,34,000 in cash on April 5, 26 for the purchase of raw material on 31st March 26. Both Paul and Carl Industry follow mercantile system of accounting. Now, can anyone tell me that under section 43BH, in this case, any disallowance is required or not? No, no, Lakshmi. What is the question? I'm asking under section 43BH. Is disallowance allowed or not? You are saying not allowed because cash payment. That we will discuss later. First of all, understand what exactly the question is. As per MSME provision, whether the income tax within 15 days condition has been fulfilled or not, the answer is yes. So there is no disallowance under section 43BH because the payment has been made within 5 or 6 days, because the agreement was on 31st March 26 and the payment has been made on 5 April 2026. So there is no disallowance. Now you can see, student, the beauty of this question is the payment, as soon as you will read this point that the cash payment has been made for 1,34,000 rupees, a cash payment, your mind will say it is going to be disallowed. But wait a minute. The payment is not done in my financial year. Our previous year is 25-26, and this payment has been made in 26-27. Can you see this? How interesting is this? Matlab, 90% cases, whenever you will read this point, majority of students will think, okay, this is the cash payment, let's disallow it. But the date is very relevant. That's why it has been written that mercantile system of accounting has been followed. So this 1,34,000 should have been disallowed, but not in previous year 25-26, but it would have been disallowed in the previous year 26-27, which is not in our solution part. So we will not do anything with, say, with 1,34,000 rupees. It is not going to be disallowed in this year. Not under section 43BH covered and not for the cash payment limit. It is covered. Got it? It is very, very important point. So you can mark it like this. It is super, super important point. Chalo, clear? Next is Mr. Raman required a registered trademark on July 15, 2025 for rupees 2 lakh. Mr. Raman started using this trademark for his business from January 15, 2026. Mr. Raman omitted to enter any transaction relating to trademark in his books of accounts. So we need to claim the depreciation on this trademark. The rate of trademark is 25%. And because it is used less than for 180 days, so the depreciation would be 50% of that. And that will be amounted 25,000 rupees. Clear? That is going to be reduced. Mr. Raman bought a car for personal use on 12th April 21 for rupees 540. He started using this car for business purpose from 1st April 25. As on that day, the market value of the car was rupees 2,10,000. Assume the rate of depreciation is 15%. So how depreciation needs to be calculated? In the PGBP provision, you must have gone through with the concept of actual cost of an asset. Actual cost. So what should be taken as actual cost in case of point number 3? So when the asset has been purchased for personal purpose and then thereafter it has been used for your business, whether the purchase price needs to be taken as cost for the purpose of depreciation, or the market value needs to be taken as cost for the purpose of depreciation, or whichever is higher or lower concept. So please tell me the correct cost we should take for the purpose of depreciation. Gayatri is saying market value is irrelevant. Garv is saying 540. Gayatri is saying 540. I am agree with both of you. Absolutely right. This is going to be the cost. The cost on which the asset have been purchased earlier. So on this value, you can claim the depreciation at the rate of 15%. So the depreciation would be 81,000. Clear? He incurred rupees 2,50,000 on purchase of new machinery to be used in the production of spare parts of motorbike on 15th May 2025. So in this case, you can claim the depreciation at the rate of 15%, and that would be 37,500. Is there anything else we can claim on this plant and machinery which is used for production? Garv is saying add-on depreciation. Vishaka is saying additional depreciation. Nikita is saying additional depreciation. Very good. So in case of when we are involved in manufacturing, because you can see in this question, the assessee was in the manufacturing. And if you purchase a new plant and machinery, which is used for production purpose, then you can claim additional depreciation. Absolutely right. But the problem is we are solving this question under default tax regime, students. We have forgot it. Under default tax regime, there is no concept of additional depreciation. So yes, all the condition has been fulfilled. We should have claimed additional depreciation, and we will when we will solve this question as per optional tax regime, but not in this case. I hope it's clear. So no additional debt under default tax regime. Next is he's paid a tuition fee that is for deduction purpose, and during the year Raman has incurred rupees 9,500 in cash for preventive health checkup. That is for again deduction. This is political party. This is also for donation. One thing left in this question, and that was depreciation on building. That's why I was saying this question is so beautifully drafted that is really difficult to solve it completely without any mistake. In the starting, you must have seen the question was giving us the information that the ground floor value is 8 lakh, and we have written over it also. The ground floor value is 8 lakh. So we need to claim the depreciation on 8 lakh rupees also. And that would be 80,000 rupees. That depreciation on building also required to calculate. After that, now we will have our income is 626,500. Clear? Now let's solve this question under optional tax regime. The profit as per default tax regime was 626,500. Under optional tax regime, we have to give the scientific research deduction, which was disallowed. 75,000. Okay, let me check what was the deduction. In case of scientific research, there was a point which was saying this point number 4. Now read this point again and tell me how much scientific research deduction should be given in this case. Expenditure of 75,000 paid to a scientific research association approved under Section 35, out of which 75,000, 50,000 was utilized towards the purchase of land. So now, because we are under optional tax regime, where scientific research payment deduction can be claimed on the basis of information given, how much scientific research deduction we can claim? Vishaka is saying 25, Dhanlakshmi is saying 75, Garv is saying 75, Nikita is saying 25. The correct answer is full 75,000. Student, we are paying donation for scientific research to an approved association. And on this basis, you can claim the deduction. How does it matter for what purpose that receiver is using your donation? How you will identify also? The land purchase deduction is disallowed if it is for your in-house research. But for the purpose of payment to approved organization, the utilization does not matter. You paid for scientific research, whether they utilize for the purpose of scientific research or personal purpose, it does not affect our deduction. So full 75,000 we will claim as deduction. So if there is a case of donation for scientific research, then the utilization by the receiver party is irrelevant. The condition we need to check that the organization is approved when we give the donation. Next is additional depreciation should be there. In this situation, there should be additional depreciation 20% of this value. That would be 50,000 rupees. So after that, our optional tax regime business income would be this much amount. I hope it's clear. Okay. Sure. This is RTP question we are going to discuss. Okay. So in this question, Mr. Yuan, a resident individual aged 45 years, is engaged in the manufacturing of textile business as a proprietor. He follows mercantile system of accounting. The net profit as per profit and loss account after debiting creating the following items was rupees 20 lakh. Rupees 25,000 paid to creator for goods in cash. So one by one, we will solve all these information. But before that, we have to find out whether what is the requirement of question. The question asks us to compute total income and tax liability of Mr. Yuan for the assessment year so and so under default tax regime and under optional tax regime. So we will solve it. First of all, under default tax regime. In case of default tax regime, if you'll see, the net profit has been given 20 lakh rupees. 25,000 paid to a creditor for goods in cash. So this is going to be disallowed, of course. Goods interest received from saving bank account rupees 15,000 gross interest. So this gross interest is going to be reduced from the income. Contribution to notified approved research association for scientific research. Again, what do we need to do? We have discussed this scientific research provision multiple times today. So what is the solution of this? Do we need to allow it or do we need to add it back? It is disallowed, absolutely correct. Who is Mac is saying Mac? It is again default tax regime, so disallowed. So this 1,10,000 is going to be disallowed. Next is he paid a job charges for the value addition on the fabrics rupees 1,10,000 without deduction of tax to job workers. So if we pay job charges, does that payment fall under TDS provision? And if yes, then if we did not deduct the TDS, what are the consequences? Absolutely, it is under section 194 SEGAR and it is 30% disallowed. So in this case, 33,000 is going to be disallowed. Normal depreciation of rupees 4,50,000 as per income tax rules 1962, including depreciation on 15 lakh rupees being the cost of new machine purchased and put to use on 1st September 2025. Very interesting point. These 2 points are very, very interesting. So normal depreciation we need to add back, of course, 4,50,000. And on this basis, but sorry, this is as per income tax rules. So this is as per income tax, so we do not need to add it back. If it is as per accounting provision, then we need to add it back. But because it is as per income tax rules, so we do not need to add it back at all. Correct. Now it says 15 lakhs being the cost of the new machinery purchased. On this new machine, there is a subsidy of 20% on new machinery under technology upgradation of fund scheme from central government, which was credited to profit and loss account. Now, these 2 points simultaneously give effect to a new concept. This subsidy has been considered as income, but that subsidy was on the value of the asset. So the effect of that subsidy should be the reduction of the cost of the asset which has been purchased earlier. So this subsidy should not become the part of the income of this business. So that needs to be reduced for. This 3 lakh needs to be reduced because it is not our business income. Next, the depreciation on this new machine, which was 15 lakh rupees. It would not be calculated on 15 lakh because after subsidy, the remaining value would left is 12 lakh rupees, on which depreciation need to apply, which the depreciation which we have claimed already on subsidy, which must have been included in this 4,50,000 needs to reverse back. So on 3 lakh subsidy value, the depreciation what we have claimed, which is includable under 4,50,000 needs to add it back. That would be 45,000. So the one treatment is subsidy should not be the part of our business income. It needs to be reduced. Second, the subsidy should have been reduced from the asset value. And because we have claimed 4,50,000 in which depreciation on this 15 lakh already been claimed. So that is a wrong. Out of this 15 lakh, the depreciation should be on only 12 lakh rupees. So on that 3 lakh, we have claimed depreciation. We need to add it back. So we have added back that 45,000 rupees depreciation in this case. Moving forward, Insurance expense includes 50,000 deposited with Life Insurance Corporation of India for the maintenance of her mother aged 70 years. So this is a personal expenditure. It cannot be the part of our business expense. Need to add it back. General expense include revenue expenditure incurred for promoting family planning amongst its employee of rupees 75,000. So can anyone tell me the provision regarding family planning, whether it's going to be allowed over here or not? And if it is not, then why? In short, somebody can explain whether this is allowed or disallowed and the reason behind it. Additional debt we will claim Ch3, but under optional tax regime. Okay. Garv is saying deduction only for corporate. Well done, Garv. Very well done, of course. Family planning expenditure, Simran is also correct, is only allowed to companies. And because this question does not belong to the company, so this is going to be disallowed. Clear, students? Mr. Yuan purchased raw material for rupees 30,000 from Kana and Company, a medium enterprises as per MSMED Act 2006, for which the payment made on 18th April. That means after 45 days, there was no agreement for payment period between them. That means the limit of 15 days should be applicable. So what should be the treatment? Do I allowed it or disallowed? Galti Anil Kumar is saying allowed, sir, because it's for employees, not allowed, Galti. It's for companies only. Garv is saying for point number 9, 43B, no adjustment since it's medium enterprise. Absolutely correct. No adjustment because it's a medium enterprise. Please read the small details. The provision is applicable only for micro and small, not for medium enterprises. So there is no disallowance required in this situation. So after doing all these plus minus, you will get your PGP 2023000. And when you will solve this question under optional tax regime, the scientific research expenditure, that is 10000 can be claimed, and additional debt on 12 lakh rupees at the rate of 20%. That means 2,40,000 can also claim. So that would be 1673000. Business income under optional tax regime. Clear, students? Moving on to next. Now some case scenario based question is there. Again, as I have told you in the last session also, in case of case scenario based question, each MCQ you should read first. That what's the requirement of that MCQ, and accordingly we will find out what information is relevant for us. It will happen in multiple MCQs that if you are reading an MCQ, maybe the information which is given in the question will confuse you if you try to consolidate all the information to solve a MCQ. So let's see what is the requirement of first MCQ in this case. While computing the total income of Mr. Ram from residential and commercial units let out during the previous year 25-26 will be taxed under which head? So we have to see that Mr. Ram let out income from residential and commercial is taxable under which head? So Ram Builder and Developer is the sole proprietor. So it's a builder. And in case of builder, the houses are stock in trade. The question say the main business of the concern is construction, development, and sale of residential and commercial unit. Ram Builders and Developers developed a project named Luxuria Heaven, which has both residential and commercial units. It obtained certificate of completion on 31st March 25. Ram sold majority of its residential unit and commercial. However, around 30 residential, 15 commercial units were held him as in stock in trade as on 31st March 26. During the period, there was slum in the real estate sector. In order to earn some income from these units, Ram incidentally let out some of the units held as stock in trade. Details are given as under. 100 units, 70 sold, held stock in trade, let out 10. Vacants during the whole of the 20 has been vacant and the let out rent is 10,000 rupees per month. Commercial 5, rent is 18,000 per month. So now the question is asking where this income needs to be taxed of the properties of 10 and 5. So what is your answer, students? If the property is your stock in trade and if you let it out for some duration, then where the income is going to be taxed? Garv is saying leasing is always income from house properties. So for this purpose, there is a specific provision that if you are a person for whom the buildings are stock in trade, and if it has been let out for some time, then the income is going to be taxed under income from house property always. So the answer of first question is income from house property. Next is, what would be the tax treatment of vacant residential and commercial unit held as stock in trade as on 31st March 26? So as the properties which is with builder, the provision says if the property does not let out, then that property annual value would be treated as nil for 2 financial years from the year in which the completion certificate has been received. So because the property has been constructed and the certificate has been received on 31st March 25. So for this 31st March 25, 31st March 26 and 31st March 27, the annual value would remain nil. The correct answer out of these three would be the annual value of both vacant residential and commercial units will be nil for this year. Hence, no income from vacant property would be taxed under income from house property. Next is, what would be the full value of consideration in respect of sale of unit to Mr. Gaurav for the purpose of computing profit and gains of transfer? As you can see, the 5 units which has been sold, consideration was 20 lakhs and stamp duty value is 22. Now the provision says, if the stamp duty value does not exceed 110% of your consideration, then consideration will become your actual price. That would be considered as your revenue. In this example, you can see the stamp duty value does not exceed 10% of the consideration value. So it is not exceeding 110% of consideration value. So this value will be the sale consideration price for the purpose of these property. And at the time of agreement, the payment has been made via check. So the stamp duty value on the agreement date needs to be taken. And for 5 property, it would be 100 lakh. So the correct answer is option number 8. Moving on next. Case scenario number 2. Lux Enterprises, a proprietorship firm of Mr. Lucifer Morningstar, a resident individual in Maharashtra, engaged in business of printing and publishing. The following details pertains to the asset of the business as follows. Office building superstructure, BMW M4 convertible car, machinery is used in printing, WDV of the machine has been provided in the question, he has opted for the default tax regime. As soon as in case of depreciation, default tax regime has been used. So there's a good news because you do not need to bother about additional depreciation concept. Now we will see what is the question. What would be the amount of depreciation allowable on plant and machinery for the previous year? So if you will see, the opening WDV has been given in question is 14 lakh 50,000 rupees. And because it is opening WDV, so the DAP rate would be normal DAP rate. That means 15% needs to apply. Now, in this case, the new machine has been purchased and put to use on 15th December 25. 15th October 25, sorry, for 9,12,500, on which, because it has been put to use less than 1 days, so the DAP rate would be 7.5% need to apply. Now, in this case, if you will calculate he has opted out of the default tax regime. That means we are solving it under optional tax regime, students. Additional depreciation would be applicable. So in this case, if you calculate the depreciation on these value, the depreciation on 14,50,000 would be 217,5000. The value was 1 crore 45 lakh. And the depreciation on this new asset would be 68,438. So the aggregate of depreciation would be 22,43438. Now we need to apply the additional depreciation also, which would be 10% on this value. That would be 91250. So after adding up, the value would be 2334688. That means the correct answer would be option number B. Now the question asks, what would be the WDV of the plant and machinery in this case? So as we have already calculated the depreciation, the calculation of WDV is very simple. 1 crore 45 lakh rupees, the opening WDV. New asset purchase was 912,500. The depreciation we have already calculated is 2334688. So the balance would be my WDV 130,77812. That means option number C. Any confusion in this, students? Okay. So we have done a lot of questions, case scenarios, MTP, RTP, etc. So it's my advice to all of you, please do revisions as many as time, including the theoretical provision as well as the numerical and practical questions also. So if there is any query, please ask, else we are going to close the session. Gayatri is asking how to remember all the provisions. Gayatri, there's only one way that you have to do revisions. No other way. You can make short notes for your convenience. You can decide when to revise chapter wise. The chapters you think is difficult, you have to revise them frequently. The chapters you think it's not that difficult, you should revise it. You can revise little less frequently. But there is nothing except the revision which will be in which will help you to revise all the provision, to learn all the provision, and you'll be able to solve the questions. Gaurav is saying, sir, can we use acronym PGBP in exam or would it cost marks? No, you can write it down at one place, the full abbreviation, profits and gains of business and profession. First of all, you can write it down at starting point and then you can use GBP, it will not cut your marks, don't worry. So May 26 LVRC assignment not open. Look, I have uploaded it. Aditya, maybe there is problem with your connectivity, or if there is still a problem. Student, anyone has downloaded the assignment of salary, etc. I have uploaded it. Aditya is saying assignment not open, but I don't think so. It is like this. Assignment have been uploaded. So,
सर
जी sir.
मोबाइल में डाउनलोड कर रहे हैं या फिर लैपटॉप में? मोबाइल में प्रॉब्लम हो सकती है, स्टोरेज वगैरह रिलेटेड टू।
ओके, जैसे सर ने बताया है, आप मोबाइल में हो सकता है डाउनलोड ना हो, आप लैपटॉप में ट्राई कीजिए, इट विल बी डाउनलोडेड। मैक इज सेइंग यस सर, इट्स अपलोडेड। ओके, Gold is asking, sir, could you please tell me whether it works if we take few tax audit report of business firm and practice those, sir? It will consume a lot of time of yours, but it would definitely help. But for academic purpose, I would suggest please try to solve these questions or MTP, RTP, and study materials, test your knowledge. And if you really want to check that tax audit reports of business firm, that will definitely help, but that will consume a lot of time. So knowledge is never wasted. You can try that. So Ashokji, there is no more query. So can we close the session? Yes, of course. Good night.